What's up, guys? It's October 2nd, 2023. We'll do a breakdown of the ES. We're going to do the price action breakdown and where we are in the market cycle. So, yesterday's context, we had a bear channel and the day ended within a range. The day started within a range up here, the first half of the day, or first quarter of the day, first third of the day, excuse me. And then we channeled down into another range down here. So although yesterday was kind of trendy, it was still just as rangy. We had about range, trend for 2 hours, and then range for 2 hours. So still a lot of good price action yesterday. And today the first bar of the day is a bull bar. We have a gap down, but bar one is a bull bar. So not good for bears. They want to see continuation and a breakthrough of yesterday's lows. Bulls are trying to defend this and keep the gap open. Bulls don't want to come back down, and if they do, they will cover. So that's kind of what I'm looking at first bar of the day. Here we go with the first 6 bars of the day. First 6 bars of the day, limit order market so far until bar 7, bar 6, 7, I think. Let me turn this on there so we can talk faster. First bar of the day is we have a gap down, and bar 1's a bull bar, and then bar 2 is a bull bar. So bulls are buying lows. Bar 3 is a bear bar with a doji and a wick. So this could be seen as leg 1, leg 2, and leg 3. This is a limit order market. Bulls are buying lows and bears are shorting highs. Bar 6 is an inside bar from bar 7. So there's pent up energy here. Bar 7 was the 7 o'clock bar, and this was also a news bar. It was a breakout. I got trapped at highs, by the way. I bought this, forgetting that yesterday we were in a range. So if we just look at the last 20 bars, the market is still range bound. There's no reason for me to be buying breakouts in a range. So I got trapped. Market is range bound due to the last 2 hours of yesterday's price action. We're stuck in yesterday's range. Bar 8 is a failed breakout to bar 7, and we're right back in the daily range. Bulls made 10 points, and bears made about 9 points so far. Here are the next 12 bars. It's 8 o'clock Pacific Standard Time, and it's a small pullback bear trend. It's a not small pullback bear trend. It's a very crappy pullback bear trend. Bears get the failed breakout. Bulls try and cover, and they get their 10 points. It starts here. So failed breakout leg 1. Bulls cover. The market races up here, comes back down for the bulls, and shoots back up. And bears get a lower high now. So this is a failed breakout met with a lower high at previous resistance. The market saw this and shorted. They had laced up here with sell orders, and we can see that through this wick here. That we already know there's evidence that the market is selling right here. And that's what happens. Bears sell. This is a bad bar for a bear. You don't want to see this. If you're a bear shorting, you're expecting a breakout. So bar 13 is bad follow through for the bears. And I think that's what made this whole thing confusing, because at this point it looks like a failed breakout head and shoulders. Cool. That's also why we got a big bar here. But then this happens, and now the market is, the bulls and bears are fighting. This is a perfect range. Although it has a bull body, this is a range bar. So this is the range, and you can see how it's like sell high, buy low for about the next 30 minutes. If you bought here, you could scalp a point even though they're bear bars. If you sell here, you can leave runners and catch 7, 8 points. So bears are in control of the day, but bulls are present. as we're still in yesterday's range, just so you guys can see, we're still in yesterday's range. Bulls are buying lows, and that's demonstrated throughout the wicks here. We can see this is all so wicky. There's no strong bear close under bar 1. Bar 18 is the only bear close under bar 1, and it has a huge wick. So that's a range bar at the bottom of a range. Buyers. And that's what happened here. Look at bar 19. It surged up quickly. People are taking profits because Bulls made a quick 10 points, I think. They made a quick 11 points. So you could be late to the party by 1 point and still make 10 points because everyone sees this really weak sell, 2 legs down, wicks. It's a good buy. Leg 1, leg 2. Bar 20, you maybe think that this is a pullback into a deeper bear trend. But at this point, you should see bar 7. You should be looking at bar 1, bar 7. You should be looking at the wicks at bar 18 and know. If you're going short here, something's not right. This is an inside bar. Something's weird with these wicks. But if you do short this, you could put limit orders here and make money. But shorting, you have to be very fast or the market ripped against you. And if you market order in, you're getting for like a tick less. So it's exactly 1 point. And that's like right on the money. So bears get trapped, bar 20, bad short, and bar 21 is a bull bar, engulfing bar 20. This is strong buying for 15 minutes at the high of a range. Bulls trying to get to the high of bar 20. Oh, excuse me. I was looking at the date. Bulls are trying to get to the high of bar 77. They get to the high bar. They get to the high of bar 67, and the market sells. This was my target, and it was just too much selling. If we just look left a little bit, like look at all this selling, look at this selling, look at this wick, look at this failed breakout. This is a strong evidence zone to get short, and look at this reversal bar we get at highs. So lots of reasons to get short here, and the market sells off and makes a new low. So the market we're in an expanding triangle right now. 3 pushes up, 3 pushes down. The market is expanding. I'm gonna do the projection, and we're gonna see if it lines up body to body. The market overshoots. What if we do wick to wick? Wick to wick gives us a little bit better projection in this case, and it overshoots. What about the high here? What did I just delete? There we go. Delete this. So the projection is legit. You guys saw it. Even though I drew the first red line, look at the blue lines. I projected it. This is an overshoot. Overshoot bar 17. Or bar 15 is overshoot. This breakout has a lot of momentum, so it kept going. The market gets filled. Bears make about 20 points, I think. From the high. They make 30 points here, so that's more reason to take profits at the range lows. It's right here is just about 30 points, so that's a strong bear trend. 30 points right there. It's natural to take profits. We are in a range. Most breakouts fail within a range. This is yesterday's low, so I can delete these now. I'm gonna delete the red lines. I'm gonna turn off the 60 EMA. Okay, just clean up the chart a little bit. So we're in an expanding triangle right now. And bears get continuation down from the breakout. Here, this should be telling us, okay, 2 legs. But bulls get 2 legs. Excuse me. 1, 2, right? And this 2 legs equals a bear flag double top. Kind of like that, something like that. I don't know. But you guys see these 2 wicks right here. So not only do we have a strong pull, we have a strong pull coming down. Bulls get two legs. Bears have their double top. I think bar 36 is a really good short. I think I did take bar 36 for a scalp. I'm switching up my trading a little bit. We'll talk about that later. So I went for a scalp and I got paid, I'm pretty sure, around this area. But what I want to say is I would look for a leg one, leg two. With that being said, that makes no sense. Oh, that's the 50%. So leg one, leg two would fail, but from the idea that we would get continuation, that would pass. Leg one, leg two doesn't mean it has to equal the first move, because if leg two equals the first move, that's a 60-point bear trend. And how often does a 60-point bear trend happen? Probably not that. I can't even think of a 60-point trend either side. So in this scenario, leg two does not equal leg one, but they did get continuation, so you would have time to get out. 3 bull bars at lows, I would get out. Bulls are steady. This is steady buying pressure for 15 minutes, and we're at range lows, and bulls made money at the previous leg. So definitely time to take profits around the low. That's about 40 points now. 41 points. And that's why we see profit taking happening, because bulls start to buy when bears start to take profits, and that's what creates a pullback. That's what happens here at range lows. And they got the break and retest here, so not to mention that was a really, I think 36 was a really good short from just getting some continuation, not necessarily a leg one, leg two. It did happen, but leg one, leg two didn't equal each other. So that's kind of why I'm switching how I'm thinking a little bit, but I'm gonna get into that on the weekend. So we see 3 legs down, 1, 2, 3. So bulls get a double bottom at range lows. So this lines up with 40-point bear trend, double bottom profit taking, bulls buying. So this is, I think, a good buy for some continuation. We also have another bull flag right here. I think this was a good buy as well. I bought this bar hoping this would happen, and I thought that I'd break even on bar 54. Bar 51, we have a bull flag. Bar 56 is the 2-legged pullback for the bull flag. 1, 2. Bears get their 2 legs. How bulls got 2 legs here. Bears get 2 legs, and the market shoots up. But bulls make a quick 15 points. Bulls made 14 points, and then the market reverses right away because we're still in a range. This was a test of the open, I think, right? Yeah. So bar 57 was a test of bar 1, and then we sold. The market saw this as a breakout, breakdown, retest. Leg 1, leg 2, breakout. The breakout, I guess, would be here. But you guys, if it's close enough, it will work. So it doesn't have to be perfect, it just has to be close enough. And then bulls make another double bottom. This is a really big double bottom here. They get they have a double bottom here, a double bottom here, and this creates a huge double bottom. That's why the title was called double bottom, because this was a great nested double bottom day. Leg 2 from here, kinda-ish, into a failed breakout double bottom at range lows. And then we see bulls start to buy. They are taking profits, because I remember these bars were happening fast. And then bar 71 set the tone for the rest of the day. I think bulls were ready to buy, because I think a lot of bulls got trapped around this area, and that's why we see a lot of buying at lows, because they wanted to cover their price. And this is just from 12 o'clock to 1 o'clock market close, 1 hour. buying the high of 68, you can make 25 points. That's a lot of money. What time is this? So yeah, this was up until market close, and then did we? Okay, so no continuation after hours. So even during the regular trading hours, you can have bought or sold and made a lot of money with a wide stop. Bought or sold, expanding triangle, breakout, double bottom, and a bull flag. It's a really good day, really hard day. A lot of choppy price action in the morning. One move down was the best move. I don't know about the easiest. And then choppy price action for one choppy move up. So it's definitely a hard day to trade. And where we are in the market cycle. This is the July 27th high, and this is the September 27th low. We're trading at range lows right now from the June 2nd breakout. So this is the June 2nd breakout. And I'll fill that in later. And we are trading right above it. Bears made one leg, two leg, three leg, and we're starting to see a consolidation. So maybe we see some sort of pullback a little bit into a sell, or maybe we sell and go like that. Right now there is a lot of bear pressure picking up. There are sells right here. We know there are sells through these wicks. This bar, Tuesday, September 26th bar, has a lot of sell orders, so the market wants to sell. Bears definitely want to break down. They want to get back to here and lower. This is a nice head and shoulders reversal, but we are at range lows, and this is some steady buying, so bulls have a reason to make it back to the highs. The majority of the year has been a bullish year, but we have been ranging for a long time, and the last two legs were strong. We have finally broke the EMA and held some lows. The last time we did that was in August, and we snapped up into a range and sold again. Hope you guys are studying price action, and these breakdowns are helping you out. If they're helping you out, hit the follow button and drop a comment. Have a good day, guys.